The Canadian Real Estate Association says home sales in Canada rose almost 4% in June versus May, but activity was still down from 2023. Our guest says even in the luxury home market, high interest rates and elevated prices have been weighing on activity. It's been steady but subdued. Let's bring in Don Kottick, President and CEO of Sotheby's International Realty Canada. Don, thanks very much for coming on the show. I know it varies across the country, but where do luxury properties start? Could you give us a kind of a ballpark?
Well, thanks, Andrew. Thanks for having me. Well, luxury it's actually not that easy to define because obviously it varies market to market. Some markets being affordable, like your Calgary and your Montreal and Halifax markets tend to be much more affordable. So, in some of those markets, the luxury could start at $1 million, whereas you go to the Toronto, the Vancouver markets, you could be looking north of $4 million. So it really varies depending on the market that you're in. But it's Vancouver and Toronto, kind of set their own kind of bar there.
Some of these high-end home buyers are pretty financially savvy, and you say they've been taking their time surveying the market and not jumping in with purchases.
Yeah, we're finding that the ultra luxury buyers, obviously they're less impacted by interest rates. So they've always been kind of a discerning category, but right now there's more inventory coming on, so they can take their time. They can, make sure that the homes that they're buying have all the amenities that they want. And, they usually buy for lifestyle reasons. So there isn't any great rush for them to jump in. And, they're waiting just to see, if a property comes on that meets their specific needs. And that's what we're finding right now, right across the country.
I know, again, it's hard to generalize, but if you've got a high-end buyer of a house, do they tend to come in and do a lot of work? Gut the kitchen, for example?
Well, it's interesting. Back when COVID had happened, people were looking to buy homes and they would pretty much buy anything. And then, as we came out of COVID, we started to see people became much more selective. And what we're seeing right now is the ultra luxury buyers are really looking for the homes where they come in, they don't have to do anything. And, it's good to go from day one. And that's what we're seeing right now.
You are seeing strength in the Alberta luxury home market. Why is that?
Well, I think a lot of it has to do with immigration, and it also has to do with interprovincial migration. Alberta is a destination right now. The economy is doing very well, and it's attracting businesses, but it's also attracting people, because of its affordability as well too. So, there's a lot of action, a lot of activity. I was just at the Calgary Stampede just yesterday, and it's a booming place right now. You can feel the energy there, and people are sensing that, and that's why it's very attractive at this point in time economically.
What about the Greater Toronto area? It does attract so many migrants.
Yeah, we experienced probably the record number of population growth out of any of the areas all across the country. So yeah, it's definitely a destination, which is obviously putting pressure on our housing supply. I think it's no secret that in the last 3 years, through immigration alone, we've added close to 2.8 million people looking for homes across Canada. So this is putting pressure on the market. And, Toronto is always and will be a destination. It is a place that people want to go. And especially if they're new to the country, they want to come to the vibrant city. And we're seeing that right now.
And you started off by touching on this, Don. A lot of these luxury buyers, they don't have to borrow to buy the houses. They've got cash from whatever source, but they're less dependent, you said, or less exposed to changes in mortgage rates.
Yeah, absolutely. They usually have the assets. They don't. They're not influenced by interest rates like the conventional market is. So that allows them to be much more discerning. Allow them to take their time. That sense of urgency is not there as it is in the conventional market. So you're absolutely right. Yeah, interest rates have very little effect in the luxury space, but even less so in the ultra luxury space.
TD is under pressure, as you know. It's got scrutiny of its anti-money laundering controls in the United States. We sometimes hear luxury real estate can be a way for people to launder money. Do you sometimes get clients that come to you wanting to buy and you think, I feel uncomfortable with this person, and you ask them to go elsewhere?
Yeah, I mean, we don't see a lot of that with our clientele, but I mean, we follow a lot of the protocols that have been put in place through organized real estate, through our FinTrack, our screening process. So if a realtor did see something that was suspect, they would definitely report it. But we see very little in terms of that kind of activity with our clientele.